Hello, chart watchers, and welcome to Market Watchers Live with Erin Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so roughly for 24 hours. If you'd like to review an older program, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Erin will provide me stock symbols from your questions, and I'll use those requests in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right portion of your screen, you'll see a How'd We Do section with a link to a very brief survey. Let us know what you think of Market Watchers Live. And, of course, let us know if there are any suggestions you have to improve the show. For those of you joining us for the first time today, welcome to the show. Glad that you made the decision to join us. And for our regulars, welcome back. Just a couple quick announcements before we get going. Tomorrow, Tushar Shande will be joining us. Really excited to have him on for the first time. He's another momentum trader, a trend follower. He has a trend meter. I'm sure he'll be discussing all of that with us and let us know what he thinks of the market. So be sure you have that on your calendar. Greg Schnell will join me on Thursday as Erin will be out for the day. So that'll be an interesting show, I'm sure. And then Erin will be back on Friday, and she'll be providing you an in-depth look into the DP trend models. So you don't want to miss that show. One final announcement, Stock Charts Outlook, our monthly webinar that will be this Saturday. Greg Schnell and yours truly will go through and kind of update what we've seen in 2017, maybe give you a few predictions for 2018. So that'll be an interesting show on Saturday. That starts at 11 a.m. Eastern Standard Time. Just like when you come into the Market Watchers Live show through the webinars, there are two choices when you go in, and one will be that Stock Charts Outlook webinar, and that will be again Saturday, 11 a.m. So mark your calendar and join us if you can. And with that, I'll bring in my co-host, Erin. How are you doing this morning, Erin?
I'm having a very good morning. Thank you. A little bit windy here in Southern Cal. I've got a lot of ash and dust from the hills kind of flying around. But other than that, it's a nice blue sky and makes me happy in the morning to get that blue sky.
Well, I know, but I know some of your neighbors there in Southern California are struggling again because I think fires have broken out north of LA, or at least that's what I had read. So prayer to everyone out there, especially if you've got windy conditions, that could make it really tough.
Oh, it's always the worst. It's always the worst when that happens. Yeah, it's just one. Everybody says, well, when is fire season? It's like 12 months out of the year, pretty much.
It was yesterday, today, and tomorrow.
Yeah, we just either dry with winds or just hot and dry. And it just, lots of tinder out there.
Yeah. Yep. Well, I tell you what, there's a lot of fires going on in the market, but at least it looks like the fire in technology is out at least for half a day. We'll see whether or not it continues, but we got a lot going on, a lot to get to in the show. So I'll let you take over and let everybody or give everybody that agenda in our first market update.
Absolutely. And we do have lots of charts to show you today. Very exciting. Market updates on that half hour. Not the half hour. We'll have two. I'll give you the first one. And then at the end of the show, we'll have one more to see what's been happening while we've been talking. Talking technically, we have some interesting news for you out there. We'll look also at the tech and some of the other sectors. Then we have chart breakouts. And Tom and I have been looking for various charts that show promise, maybe because you're seeing a breakout. So we'll go over those and see what you think. 10 and 10 to 1. First one is going to be IPGP, IPG Photonics Corporation. So if you want to go take notes, check out that chart and then see what you think. And then what would you do is going to be coming up at the end of the show. And I believe we picked symbol data, DATA. So again, if you want to go real quick and take a look at that chart and jot down some notes about what would you do, we'll be asking you and taking a poll in the live chat room. Mailbag and wrap up to finish it up. And with that, away we go to the first market update. All righty, here we go. Candle glance. I'm going to go ahead and refresh it. I think that's always a good idea when we're looking at live charts. All right, so the market was kind of choppy this morning when you look at the Dow anyway, trying to make a move up in a rally, but with the S&P 500, and you can see pretty much all of the major indexes failed to hold that intraday high and are now falling. Tech, yes, is doing better, but not that much better really in the grand scheme of things. We're also seeing it turn down right now after topping at intraday highs, actually at a high that matched trading yesterday midday. So we'll have to see if it can get itself turned back around and back up. But in comparison to the others, yes, tech is doing better. Small caps struggling today, never really were able to get onto the positive side of things and are continuing lower, getting ready to hit and test intraday low from this morning. Wilshire 5000 almost unchanged at this point. We can see Treasury yields are down, currently reading at 23.69. Choppy day for UUP, really choppy day. But right now, currently up 3 cents at 24.28. You can see commodities are lower. And with oil, we're seeing, again, some of this choppy trading. We've actually formed a double bottom right now with the two intraday lows that I'm looking at. Currently, we're up slightly on USO at 11.51. Gold gap down, and it's breaking out of a declining trend here, but in general, I would have to say gold's having a very difficult day. We'll have to see if it can hold on to that 119.75 area as support for the day. The VIX is lower at this point, reading at 11.03, declines leading advances. I'm going to take us over here to our market summary so we can get an idea of what sectors are performing well today. And I think it won't be any surprise. NASDAQ 100 definitely on the top. And the NASDAQ 100 is having a very nice day. We'll have to take a peek closer at the NASDAQ later on. I know Tom's going to be looking at that sector. We could see S&P 100 is doing well. Where are laggards right now? Dow Utilities and Transports are getting hit the hardest. When you look at the sector spiders, technology at the top, not a surprise. And we could see utilities are the big laggards, down almost 1.25% right now. As far as U.S. industries, of course, you're seeing disk drive semis, computer technology at the top, and gold, which I did point out is having a very bad day, is down almost a little over 1.75%. Natural gas and oil services also laggards right now as far as our industry groups. Looking at international ETFs, Malaysia and Brazil having very good days, each up over 1%. The laggards right now, India's ETF is having a really difficult time. I know it was leading yesterday, as you can see, with that nice close at the high, but now it's pulled back greatly. We're down almost 4% here, but it's not horrible. We're still looking at there's some support here. I would just be worried about the fact you've got this double top that's formed as price has been in this rising trend. And to me, that would be a problem. The neckline would be right here at about $81. So you'd want to watch, maybe set a stop just under that if you happen to be in this right now. But not looking like somewhere I would want to be jumping into with that double top. That's all I have for our first market update, and I will cover more at 1 o'clock.
All right, sounds good. Thank you, Erin. A lot of interesting stuff going on today. I tell you, I got a lot of mixed feelings about the market right now. I still think the market's going higher down the road. I'm just getting a little bit more concerned in the near term. Of course, on Friday, we saw that big move to the downside, and then we recovered. If you recall, Dow got almost back into positive territory. But it did start to show a crack in the foundation, at least in the fact that we saw a lot of selling on the Dow for the first time. And then yesterday with the news over the weekend that we had the tax plan, it looked like everything was kind of a go there in the Senate. We had the futures up big, but then we sold off all day yesterday, and it looks like things are trying to roll over again today, although technology is getting some relief, which is a good thing. A couple of economic reports out this morning. We had November PMI services, 54.5 was the actual reading. The market was looking for 54.7, so a little bit lower than expected. And then also November ISM non-manufacturing index, 57.4 versus 59 expected. So both the economic reports came in a little weaker than expected. And you can see that the reaction in the bond market with the yield down today, just about 1 basis point. We've made this break out of this triangle, but we're really kind of struggling here with a week to go before the Fed meets. Of course, we have that FOMC meeting next Tuesday and Wednesday. And I'm pretty sure, and I think most traders and those watching the market would agree, they've painted a picture at the Fed that we're going to get another rate hike. So I would be shocked, and I think the market would be shocked if we saw anything other than probably a 25 basis point increase next week. But right now, the 10-year Treasury yield, what I was expecting was that we might get a pretty big move, and maybe we still will. But I was looking maybe to even get back up to that March area around 260 heading into this Fed meeting. But maybe what happens is if the Fed raises, maybe at that point we make a little bit of a move up, challenge this 247 area, and maybe break through. But those are the two key areas to watch on the yield. You've got short-term resistance at about 247, and then really longer term, if we pull up a weekly chart, I think you'll see that this 260 area right in here, we had the double top. You could go back into 2015 where we got up to about 250. And so this is a pretty big level to clear. And I still think that this downtrend that was in play here over about 3 years, we broke out of to the upside, been consolidating, but I'm still expecting another move to the upside, which should continue to benefit financials and industrials in particular, maybe the retailers as well. But anyway, those are some of the things to keep in mind. Earnings reports that were out, Toll Brothers missed on the top line and the bottom line. I thought that was kind of interesting because when you look at Toll Brothers, we had been in a beautiful uptrend. And I think probably this is a temporary setback, although once you miss on earnings and revenues, I'm not interested in trading the stock. But I wouldn't be surprised based on the huge move to the upside. There was a lot of expectations built in going into this earnings report, and the fact that they missed, I think that's why you're seeing the stock down 7% today. It was a little bit of a surprise to the downside, and it's also dragging a lot of the home builders with it. So you've got the home builders or home construction index. You can see over the past 2.5, 3 months, it's just been straight up. MACD has been strong. We're still holding that rising 20-day moving average, but we're just now starting to see some weakness in that MACD. This is a group that if we can't get a breakout on the next strength, I'd be a little careful, maybe going in to the end of the year into 2018. Not necessarily from a longer term perspective, but just from a market rotation perspective. They've been so strong for the past 3 months that it wouldn't be too surprising to see the group pull back for a bit. And I think Toll could be giving us that first warning sign. We'll have to continue to watch some of these other earnings reports as they come out later this month and into January of 2018. Also, we had a report out, and this one actually was really good. HD Building Supply, or HD Supply Holdings. HDS is the ticker symbol, and you can see a very nice reaction. Look at the volume already, over 5 million shares. And when you go back, you can see 5 million shares is a big deal. We haven't seen volume like this since the huge move down back in June and into July. But this seems to have kind of righted itself. And with the top line and bottom line beats and this kind of reaction on increasing volume, looks to me like this overall downtrend has ended. I would say this is sideways consolidation with a breakaway gap now to the upside. So I think HDS certainly going to be one of the stocks I'll keep an eye on. I'm not going to jump in after a big gap up like this, but definitely one that I'll be watching in the days and weeks to come. I wanted to go through some of the sectors. So, of course, technology is a big one. And this is a group that's been getting beaten up. You can see these big red candles. I'm a little concerned about a couple things right now. Number one, I think we could have established with today's low, perhaps the right side of a downsloping neckline. So you got a left shoulder, neckline, head coming back down, putting in a slightly lower low, which I don't like to see. And then you can see even with today's rally attempt, we're failing at that 20-day moving average. So it's almost like we're starting to roll over here. And based on the negative divergence, higher prices, lower MACD, this isn't too surprising. And the selling is not coming on light volume. It's been on very, very heavy volume. So it appears that after a huge move up the past few months and really the past few years, it seems like there's a little bit of distribution, maybe a lot of distribution that's taking place in technology right now. I don't think the selling has ended. Although in my blog this morning, once you take this kind of hit, you wouldn't be surprised to see a little bit of a bounce, but we got that today. And if you look at an hourly chart on the XLK, whoops, not a weekly chart. If we pull up an hourly chart, you can see that most of the action right now, we cannot get an hourly close above that 20-day moving average, with the exception of the gap up yesterday. And we quickly gave that away. We have not had an hourly close back above that falling 20-hour moving average. And you can see earlier today when we got up to about 63.20 or so, we actually were above it intra-hour, only to turn back down. And now we're quite a bit below it again. So the XLK, while it gave us a little bit of relief this morning, I'm not sure that all of this selling is over yet. And if we go back to the daily, I think the area to really watch is you've got the top of gap support at 62. You've got the bottom of gap support at 61. You've also got price support that comes in just above 61. Once you break out above that prior high, that establishes support. So I think this area, 61, 62, is really important. But you could make an argument that if this breaks this head and shoulder top, that actually that measurement might come down to the breakout level that we saw back in October, closer to maybe that 59 area. So just some things to think about. I do think as technology falls, it's becoming a better and better opportunity, but trying to figure out exactly where that bottom is not always easy. So I would be looking 61, 62, though, in the near term. I think that's probably where we're heading. That should relieve the MACD, should take it back down maybe for a center line reset, which is just bringing those two moving averages back down to zero so that there's no difference between them. And that would, in my opinion, at least resolve the temporary problems with price momentum. Also, the thing to keep in mind, too, is when you're in an uptrend like this, and I know Arthur Hill follows this as well, when you get pullbacks, a lot of times you'll get into periods where you're overbought, but normally when you pull back, you'll see the RSI drop down to about 40. And we saw that back in April on this 50-day test. You can see here we actually went a little bit below the 50-day, but we held on to price support, and the RSI dipped to 40. Here we got a little bit of a dip on the RSI into the 40s. Same thing in September on this little bit of selling. But here you can see we actually got down fairly close to 40, maybe 45 or so, and we're currently sitting at 48. These tend to be much better reward to risk entries into technology. So the group is improving. I just don't know if it's quite done enough selling in the near term. The other thing to keep in mind, I'm going to read you some numbers here, hopefully not to put you to sleep. But even though December is the strongest month for the Russell 2000 and for the S&P 500, and I believe it's the second best month for the NASDAQ, I did go back on the NASDAQ and take a look, and I've talked about this upcoming week that tends to be somewhat bearish. There is about a 1 week period, and on the NASDAQ, it runs from the 8th at the close until the 15th at the close. That 1 week has been down 11 times in the last 16 years. So this century, it's been down roughly 2/3 of the time. And the average loss over 16 years is about 1.6% from December 8th to December 15th. So we always tend to gear up for a nice rally into year end. But just before that, we do tend to be a little weaker. And knowing what's going on with the market, knowing that we're overbought with financials, that we're overbought with industrials. I'm going to pull these charts up real quick. But we've got the XLK here that you can see we were very overbought, negative divergence. That's dropping. Then we get into the financials, the XLF. And on this huge move here, look at the volume coming in. All this is great, and I think sets up for a future advance down the road. But look how overbought we are now on the XLF. We've got the daily RSI up at 81. It could use a pullback. Then we've got the XLI, Industrials also with a huge move. I don't like that big long tail. It was a shooting star candle off of this uptrend. So this is starting to signal to me maybe the overbought conditions are kicking in. And so the rising 20-day, we could see a pullback there. You pull up the consumer discretionary, this group just doesn't seem to want to quit. Watch for an island cluster reversal. So we got the big gap up yesterday. We're sitting here just going sideways. A gap down from this area, maybe tomorrow or maybe Thursday, could potentially mark a short-term top in the XLY. And so these are the four key areas, four key sectors of the market. And so you've got technology with a negative divergence, still working that out. And then you've got very overbought conditions on the XLF, XLI, and XLY. So it kind of seems to be lining up to me for a possible pullback and maybe some profit taking here, just as we hit this period of December where we do tend to see historical or seasonal profit taking. So just all these things to me just line up and say, be a little careful. And for me, that just means having more cash on hand. So I am not fully invested, even though I'm very bullish the market. I think we could have some opportunities up ahead. And I think that's the best way to approach it, at least from the way I'm looking at the market. All right, we've got I know we've got some upgrades. So I'm going to go ahead and go over a couple, and I know Erin has a couple as well. So let me pull these up. Snap was upgraded today, and you can see it's gotten back up above its 50-day moving average. Volume today is 27 million shares, and we're not quite to the halfway point of the day. So we're on pace to do over 50 million shares, and you can see from this chart, 50 million shares is a big deal on Snap. So the fact that we've gotten back up above the 50-day, we've got that 20-day now starting to rise up under the 50. I think all of this is good, but we haven't yet made a significant price breakout. That would not come until we get up above about 17 bucks because we've been downtrending. Here's the lowest low. Here's that reaction high. And we're just kind of trading in this range between the low and the high. So I like the fact that things are improving. I'm not ready to jump on board this stock just yet. But again, I think things are improving with this upgrade and the price action that we've seen here over the past couple of weeks. And then one other upgrade, VNOM, which is Viper Energy Partners, got an upgrade. And I think this is pretty interesting because we have broken out. We have a beautiful uptrend in play. Only problem we have really here is just that we're overbought. And you can see that the RSI, you don't know how high it's going to go, how long we're going to be overbought. But you can see from back in mid-October that if you time it wrong and you chase an overbought stock, it can be painful in the short term. So as a short-term trader, I'm not interested in getting in after one of these moves. But I do like this chart, and I think the upgrade is probably just going to maybe set it up in overbought territory where we can get a pullback at some point, back down to about 2050, 2075. And if that coincides with the test of that rising 20, that would be an interesting level to take a look at. And with that, I know Erin has a couple of upgrades. Why don't you go over those, Erin? What do you think?
Okay, sure. Let's check this out. I know Vale, let's see, VALE was one. I'm going to just take a quick peek. There we go. And I'm going to pull up the annotation tool because I think it'll help with my discussion. All right. Get some light here. All right. So, previous overhead resistance here in this really nice tight trading range, got the breakout, got the test to come back down there, and then it has taken off from there. The only issue I have with this is when I look at the upside potential here, there is overhead resistance not that far away. Now, of course, with a lower price stock, that you still might be able to get some good reward out of that. I do like this PMO buy signal, and the PMO is rising nicely on this move. But I would just beware because you could also make a case for a double top forming here in the very short term. So I think there's some upside potential here, but I think you might have to take it, ride it back down or wait and get it to come back down a bit more. But and then, of course, if it does go down a bit more, now you're worrying about that double top. So I think this one's an interesting one to look at, but for me, I would probably pass on it just because I like to have more more reward potential and not as much downside risk. And I know, of course, we talk about that all the time. And I think that's a pretty good example. The other one I actually was even going to talk about in our chart breakout segment, but McDonald's had an upgrade today. I'll go ahead and annotate this as well. Here we are. Obviously, that's the key. What was key resistance now has become key support, in my opinion. Look at, very nice. You got a PMO buy signal here. We do have a small breakout here to the upside. Pull it over here so you can see the thumbnail a little bit better. And you can see right now, even, we're up over 1.5%. I would suggest looking at this. I do have that PMO buy signal. This is when I would probably want to go to the weekly chart and take a look at. So I'm going to do just that. All right. Really nice uptrend. I mean, there's really not much you can complain about here, except you've got a very overbought PMO on the weekly chart. The weekly PMO, though, is in the process of giving us a buy signal on that chart. So intermediate term, this still looks rather strong. I'm going to pull this up to annotate it just a moment here. I want to check whether we have a rising wedge, because that, my eyesight is fairly decent, but a lot easier if I can draw the line. So I'm going to drag and drop. Yep, sure enough. We have a rising wedge here. So that would worry me. I think we need a pullback. And again, you've got the PMO is, yes, it's getting ready to have a buy signal. And then when I look at this, where would I look for support after a breakdown from this wedge? I will just pull up the horizontal right here. That top, remember that breakout area, that's where I would be looking for a pullback down to that 160. So we do have that upgrade on McDonald's, and we are seeing a decent breakout on that daily chart. But I think there are still a few issues here when you look at the weekly chart. And you could even pull up a monthly just to get a really long-term version of everything. And you can see in the very long term, the PMO is rising nicely. It had a little bit of a test of the signal line there and has turned back up. So as a long-term investment, this still looks good, but we're talking long term because this is a monthly chart. So food for thought.
Yeah, I know, while we're looking at stocks, I know that we were going to go through some chart breakouts. I think this would be a good time. I know you got a bunch of them.
I do.
If you want to keep on rolling, let's take a look at some breakouts.
All right. Well, first of all, I just want to let everybody know like how I found them. And I just went to the predefined scans and I looked for either strong volume gainers. There were only 2 of those in the NYSE. I think I ended up pulling most of mine through bullish MACD crossovers. And so very easy. This is already, the scans are written. They're already done. So when you come to the predefined scans page, all you have to do is look at the one you want to look at. Then you can even pick the charts from whatever index it is you want. So I pulled all of those up, but you just have to, this was the Bollinger Band one. I didn't call this one up, but very simple. And then once you have it, you can organize it by scooter rank or, small, large, mid. It's very handy. So anyway, that's where I came up with my chart list today. And I think I put that in my other account here. So I want to go find it. Yes, there it is. There we go. I found about 16. So I don't know if we'll cover all of these. And certainly, Tom, as one's up there, just interrupt if something looks interesting to you. I'm just going to run very quickly through these in a chart book format. Here we go. All right, make sure you can see everything here. All right, so basically, like I said, I pulled up one of those scans and then I peeked at the chart because I'm looking for breakouts. And when you're in those MACD crossovers, or if you're in the new 52-week highs, whatever scan it is you do, you're looking for things. If you follow the PMO, you're looking for those rising PMOs. In this case, I would be a bit concerned because we're looking at an overbought PMO. However, we don't have a huge amount of history on this particular stock. So it really hasn't quite come to its own to determine what its actual normal range is for the PMO. But when I look near term, yes, it is overbought, and that would concern me. But here's the breakout right here. If you look across at this area that was overhead resistance at 20, we've now taken off above that. And then today, I think what's interesting is you do see the pullback. So back to that area of now new support. So I thought that was an interesting one. I guess we're in chart book format, so I'll just click next. Bank of Montreal. All right. These aren't coming in very clear if I do it this way, so I'm going to pull it up in 10 per page. Here we go. I just want to make sure you guys get the clearest picture, so do let us know. Okay, that's a little bit better. So again, chart breakout, right? We've got overhead resistance in this trading zone that we had between about 76 and I'd say 78.50 if you want to give those areas there. So we did get a little bit of a breakout there, came back down, but now we're getting the breakout. I'm looking in the thumbnail right here. We got that breakout, and again, pull back, and now we're back moving up. And look at the PMO. This one looks a lot better. The only issue I would have really is that you can kind of see that the PMO bottoms are in a decline, yet the price bottoms are rising. So that could be a concern. But I like the fact that we got that breakout and the PMO buy signals coming in. So that was one. Barnes & Noble Education. And gap up, yeah, big serious, big time breakout here. Nice PMO buy signal. Look at the scooter is obviously coming back to life. I was looking at this as, you've got I wish I had found this one a little bit earlier for you guys, but you can see that rounded bottom, the pullback just below the 20, and then we started to take off. But now we have broken above that $7 level. This is a volatile stock. We're talking about not the biggest volume here, and I know we do caution that. But I like that breakout, and I think upside potential is really quite good here at the $9 level. That's the last area I would say is pretty strong overhead resistance. And so there is some pretty decent upside potential here, but this is one of those, you're getting on a roller coaster likely and hold on tight, because if you don't like those everyday volatile moves, probably not the stock for you. Look at what we're talking about with this gap up. It's up almost 20%. A happy day, but tomorrow when it pulls back 15%, I'm sure there are going to be people who aren't so happy. So that's what you have to consider when you're looking at these low dollar, low volume stocks. Cameco Corp. Nice breakout again above this area, I would say, of overhead resistance that's now forming support. Got that intraday high poked out there, and it's pulling back toward this new area of support. And look at it, even has some help here as far as being good support back here at these lows from the spring. So I think that looks pretty good. You're now looking at a PMO, had its fake out, now getting ready to go back out, starting to lead above previous tops here on the PMO. I think this one looks pretty good. So I would be looking at upside potential, would be probably right about in here, I would say. So I would be on the safe side as far as upside. What I would look for as a target would probably be about 1150, maybe 1175 as a possible target, upside target. And when I talk about these, everybody asks about stops, and I think stops are important, but I also like to look for upside targets, because when you see that stock, you see where it looks like it's going to go, and you're riding it and it's going up and everything seems so great. There's really nothing wrong with taking the profit when you hit a target. You can always pull back some and leave more in there if the chart still looks good. But I always consider my upside targets, because that gives me some discipline when it's time to sell. So something to think about. Right here, it's not quite a breakout, because I see this area of overhead resistance here. I think this one has a more interesting weekly chart. So I'm just going to pick that out here. And the reason I say that, nice rounded bottom, pull back, now are getting the crossover of the 17 and 43 week EMAs. And yes, those are weird EMAs to use, but I find them to represent similar crossovers on the daily chart. And so Carl and I, have looked at various EMAs, and for our weekly chart, that's just what we prefer. Everybody has their own. So nice breakout here. And again, we've got some very nice upside potential here when you're looking at a weekly chart. So something to consider. PMO rising nicely and not overbought. So let's look at our next one here, Enpro Industries. Another nice chart breakout going on here for you. One thing, again, I like these breakouts. You can see that little gap right there, and then the pullback. That's, a lot of times we show you these breakouts and they're on that breakout move, and you don't actually get to see that pullback. So anytime I have those types of charts, I do want to share those with you. But again, very, very low volume, very low volume stock. So, there could be some manipulation in there. You might end up with some really big moves to the downside, but also to the upside. All right, iShares Malaysia ETF. And it's a long-term here, not long-term, intermediate term rounded bottom. And now we're getting that breakout from that overhead resistance area. Very nice. Already had the PMO buy signal. The PMO is gliding nicely higher. And look at the scooters starting to come back to life. So I would go ahead and I would go over here to the weekly chart because I want to see some upside potential, and I can't see it on the daily chart. So for me, $34, really nice target. Shouldn't be too hard to reach. And again, if I don't see the target showing up on my daily chart, I'll move it to weekly, because my investment style is a bit more to the short to intermediate term, not quite as short time frame as you are, Tom. Nice.
Not unless you want to get out like in a day or two.
Yeah, I just don't. I don't have the temperance for that.
Yeah, a day or two is probably. I'm just kind of throwing that out there. I like to hold, a few weeks to a couple months if I can.
Do you do that? Because every time we're on the show, it's like, oh yeah, I bought that and sold that like last week. So
I would say my average holding period is probably about 2 weeks.
All right.
If a stock goes against me, I get out pretty quick. But otherwise, I try to give it time. But if it makes a big move in 5 or 6 days and it's up near my target, what am I?
Exactly.
Just take it and move on.
Yeah, take some of that profit. You can always, like I said, you can always leave a position in there if you just really want to ride out and see if you can get, eke out some more profit. But there's how many choices do we have of symbols and charts out there? Plenty. So there's always a good setup somewhere. You just have to find it.
Yep.
All right. So here's another one we got a nice breakout on, and the pullback toward that new support. Let me go ahead and just annotate so you can see it a little better. All right. Come on now. There we go. All right. Perfect, right? Right on that area of support. Got the breakout. Starting to pull back. Pulled back yesterday, and it is starting its way back up. Probably one that would have been a lot nicer to see yesterday, but still looking pretty good. Now, like I said, I don't see an upside target on this particular daily chart, so I'd want to go to the weekly just to see if I can find one. Could be at all-time highs. We'll have to see. And here we go. No, far from being at all-time highs. So where would I look for my upside target? So like I said, on the daily chart, it wasn't obvious. I'm looking at it here, and honestly, we're kind of at some overhead resistance when I look over at these bottoms over here. But I would be looking, as far as an upside target, I would be looking at this particular bar. It's very long, so I might consider going all the way down here to 35 as that overhead resistance level rather than at 40, because that was, I think Martin Pring calls them Pinocchio bars, where you get a really long bar and then it just comes back and you don't end up with anything overly crazy except for this, pointed, sticking out OHLC bar. And I think he calls those Pinocchios.
Yeah, I don't like those either. I don't like them when they leave that long tail to the top. And
exactly.
You can see what happened afterwards. I mean, I think it was just fake. It was a fake out to the upside and back down we went.
Exactly. And let's see what happened with my PMO, just to give myself a little bit of interesting. Yeah, we would have still hit if we had waited for that sell signal. Probably would have had to ride out a lot of that decline. So, and the PMO will lag at times, but that's why I look for the turning points, and I don't necessarily wait for the actual signals. I consider the signals more of the confirmation of what I've seen as far as the momentum shifting. So I think that the PMO is most powerful as far as picking investments, finding investments when you find those momentum shifts. And a couple days of a shift on the PMO, and yeah, usually you will get some follow through. All right, let's see. I have a few more of these. And all right, another nice one. This one I liked because the PMO looked good too. And you can see that nice breakout has come back today. This one looks a lot better to me because you did get that nice breakout, and we are seeing that pull back to that area of where the breakout occurred. And let's look at a quick weekly version. There we go. So it's at all-time highs. So again, that becomes, okay, well, where is your upside target? Well, I would start looking percentages as far as what you would want to see. Possibly, start following the PMO a little bit. Look for those momentum shifts. If you're more of an intermediate term trader, watch those tops and bottoms on the PMO on the weekly chart. And I think that can give you an idea. What do you usually do, Tom, when you're thinking about upside targets and they're sitting at all-time highs?
Usually it depends a little bit on the MACD. I mean, if I've got a negative divergence and I'm breaking out to an all-time high, if I see a reversing candle, that can get me out of the trade. Or if it fails to hold the breakout level, that'll get me out of a trade. But normally, if it's good volume and it's making a breakout, I normally let it go and just kind of monitor it. And when I talk about a negative divergence, sometimes it could be a negative divergence on an intraday chart, like a 60-minute chart. So it's making nice move, and maybe it's broken out by 3-4%, but all of a sudden the 60-minute chart starts to roll over in the MACD, and that might be enough reason to take profits.
There you are. Okay, so let's see. I have a few more, and we're getting up on the 10 and 10, so this should work out pretty well. I already looked at McDonald's for everybody. All right, clear my throat there. Okay, this was an interesting one that I saw because you get the gap up, and I'm not familiar with whether there's news out there for Regal Entertainment Group, but really nice breakout above this area of overhead resistance at 22. Not only did it break through that, it gapped up even above that. So this one's looking pretty good, but look at the PMO. It is really overbought. And I'm going to pull this out to a longer range just to be sure that what we're looking at is an overbought PMO. And I always tell people to do this when we're looking at overbought and oversold conditions. Yeah, I'd say that's overbought. When you look at it, you look for what the normal range is. And if I were to do this, I would probably look at a range, a normal range between about 3 and +3. I think that would give you a pretty good idea of a range. And that is the beauty of the PMO. A lot of people ask me, well, why do you use the PMO and not the MACD? The PPO also could be used as an overbought, oversold, but I find that the PMO really gives you the best use as far as looking at overbought and oversold readings. And you can't do that with the MACD because of it's unbounded. It's not an oscillator like the price momentum oscillator is. But yes.
I just wanted to point out Regal Entertainment actually spiked because the company's was agreed to be purchased by a UK theater company called Cineworld Group.
There, see, you had to think that there must have been some news when you're looking at a over 9% move on the breakout. So I would probably stay away from it just because it's sitting in the news like that. It's hard to say which direction it'll go. But if you wanted to look at a pull back and then look for possible test of overhead resistance. Of course, your target would probably be right around that $23 range, and we're already getting very close to that.
Yeah, what I find pretty interesting is the almost 50% move prior to the announcement.
Right?
From 14 to 21.
Yeah, you can see it here in the thumbnail pretty clearly.
Yeah. Call me crazy, but if I was at the SEC, that might be something you might want to take a look at.
It's we talk about this a lot too. That it does seem that there is some inside trading going on, or people get the information however they get it, and it just does seem like that, doesn't it, Tom? Where you do question.
Well, I haven't looked at the history of the news out the past few weeks on this stock, but you can definitely, just looking at your chart, you can see the volume. If you go back over the last year, I mean, the volume these past few trading days has been extremely heavy, and the stock literally in the last week's gone from about $16 up to 21. So, and I know the market's been hot and consumer discretionary's been hot, so that can add some of it. But that kind of volume and that kind of move just before an announcement of a buyout just doesn't quite pass that smell test.
Yeah, I was going to say there's a scent out there, and it's not particularly nice. All right, Scott's company. It's not quite had the breakout, but I would say if you want to look at the $100 level here, we do have a breakout. And the only issue is you can see that close back up here and right up in there. And we haven't quite broken out from that. So that would give me a little bit of pause. But looking at these indicators, the indicators look very nice. And the volume, that accumulation there with the PMO buy signal, Scooter has moved into the hot zone. I think this one looks pretty good. And I'm going to take it out again. Like I said, when I think something looks good, I'm going to pull it out to a weekly chart and give myself some information as far as momentum, because I am more of an intermediate term trader, and this is pretty much how I do it. So anatomy of a trade going on right now. So you can see with the PMO, it had that head fake there, and then it has started back up. It is not at all overbought. So, again, I would be thinking percentage gains to come up with some upside targets, possibly. As Tom was saying, watch. I don't follow the candlesticks that much because I'm not that short term in my trades, but look for those types of information. Look at the support of your 20-day EMA. Look at the support from previous overhead resistance, for example, that $100 level. So it would be nice to see it actually come back a little bit to that $100 level, but I think this is looks fairly decent. And again, I like the indicator setup. Let's see, 2 more minutes. We're almost there. I know Snap was one you already looked at. Nice breakout on a gap, and we're getting the pullback. Love it. We've got the PMO buy signal heading straight up. Not at all what I would call overbought, especially near-term overbought. And nice Scooter. Volume is moving the right way. Look at all that accumulation earlier. I think this is a real interesting one as well, as far as chart breakouts. Shaw Communications is another one. I like this one because it looks like a flagpole and a flag on the end of it. But we are still dealing with that overhead resistance. We really haven't quite had that breakout. We did 2 days ago. We got that, intraday high, but the close wasn't quite there above previous overhead resistance. But we're pretty good here. I think we've got the breakout potential, especially when I look at that flag, look at the PMO buy signal. Again, not overbought. I would like to see something a little bit more exciting as far as volume is concerned. As we've come up and out of this, you can see the volume pattern and everything is just sort of declining. Seems like we might have some lost interest there. So I would be a little concerned about that. But I always like to see the flags. Those are just really nice continuation patterns. Snap, we pretty much already looked at, so I'm not going to spend a lot of time on that one. But I did get the PMO buy signal. We're not seeing much, though, coming out of the Scooter at this point. So as far as tech and looking at its relative, it's relatively, it's very weak in its universe. And so that would be that right there would tell me I probably want to look for something else. But we did get a breakout over this very short term resistance at $14. Upside potential looks pretty good up into that $17 range. But, as far as that sector in the market, I think you could probably find some better setups than that. This one I saw because we had the breakout above that $20 area. You can see it was formed support earlier in late summer. And I think the upside potential looks pretty nice on this to that 23 area. Look at the PMO. Really nice undulating move with that buy signal that's clean, not a lot of twitch. So I like seeing that. And the scooter is starting to come to life as well. So I thought that was a pretty interesting chart breakout. And that concludes all of mine. And now it's your turn to talk about the 10 that we have had as far as requests.
Yeah, I had a few breakouts, but I think we'll have some time later on, so I'll go through some of those in a bit. But yeah, let's jump into the 10 and 10. And I know I think everybody's probably waiting for that one since we're just a couple minutes behind, but no biggies. So let's, what was that first one? Is it IPGP?
Yes, it is. IPGP.
All right. Well, I don't like the big volume break of the 50-day moving average, but we are seeing that on some of these stocks. First of all, look at how far the stock has run. If you look back to May, before the gap up, the stock was trading over here at about 125, maybe just above, and we just nearly hit 250. So, as Arthur was saying in his article recently, you got to take all these things into perspective. I mean, it's nice to have a stock that just goes up every day and doesn't come down, but that's not really realistic. And we're going to need some consolidation. We're starting to get it. Some of these stocks that have been the best performers in 2017. So I've got to let these things settle down, especially now that it's lost the 50-day. I mean, I could look back, but the problem is there's not really been a lot of consolidation. What I normally like to do is see the last period of consolidation and then the breakout that's never been retested. But when I look back, I mean, where has there really been much selling? There hasn't been a whole lot. So maybe take a look at the weekly and see where the 20-week moving average is. So on the weekly chart, you can see the 20-week is sitting at 196. So maybe if we go below that intra week and we come back up and close above it, either this Friday or maybe next Friday, that might present an opportunity because you can see over the course of the last year, a little bit over a year, we haven't closed below that rising 20-week moving average. So that might be one thing that I would consider. So what I'll do is just go ahead and jot this put this arrow in here on the 20-week moving average. That is really the only thing I can see on the chart. If it goes below that, it's hard to really, I mean, just look at this. It's hard to pick a spot where you can count on support holding because it's been a straight up move. So I think you got to be real careful if that 20-week moving average on IPGP fails to hold.
All right. Let's see. Actually, it was kind of interesting. I hopped into that chat room that one of our viewers was asking everybody in the chat room what they think about a good buy and hold right now. So there were a few suggestions. So I thought I would throw those out at you. And I think CCJ was one of them.
Yeah, well, I definitely am not a long-term holder of stocks, and I think you just talked about Cameco Corp CCJ just a bit ago.
Oh, probably.
On your breakout. And I do like the high volume move to the upside, taking out these prior highs. But, it's hard for me to tell what's going to happen a week from now. So it's, to go out a year or 2 years, to try to figure out a good stock as a whole, buy and hold, that's really just not my style. But I think there are a couple of areas on this chart. You can see that the failure here, you can see a big breakdown below this level that roughly held its support prior to this high volume move. So I think the fact that we've gotten back up on heavy volume above the 1050 area, I think that bodes well. And I think this rising 20, we've had a huge move now over about 6 weeks, but I think this rising 20-day moving average will quickly come up underneath price. And the combination of the price support at 1050 and this rising 20-day moving average, I think those are the two key areas that I would watch to the downside as long as I'm holding.
Okay. Next one is XIV.
XIV. The inverse VIX.
Oh,
Okay.
wow.
Yeah, this is not something that I'm a big fan of. It's just volatility is so, first of all, volatility is not like a stock. Volatility doesn't just trend up and up and up for ever and a day. The VIX moves wildly back and forth, but it tends to always revert back down because what the VIX is it's the expected volatility of the market looking out over the next month or two, and it's calculated using the premiums on the short-term S&P options. So, eh, and then that's used to predict what the market feels the range is going to be on the S&P. So when things start to sell off and everybody gets nervous, the VIX spikes because those premiums become more expensive. The options become more expensive as the premiums grow. So trying to determine the XIV, which is this daily inverse VIX short-term ETN, it's an inverse, so it's going up because the VIX has been going down. And I like the fact that the VIX, this is an inverse, and instead of VIX, it's XIV. I just realized that. So I guess that's the inverse ticker
Cool.
symbol too. It's just not something I trade. I'm afraid to even talk about it because I haven't really followed it long term and how it relates with the market. I mean, obviously, when the market's bullish and the VIX is falling, this is going up, but the VIX is so low. I mean, you can see when we get spikes in the VIX, this inverse gets absolutely crushed. It gets hammered. So just understand the risks. I'll go ahead and put a line on here just so I can say I annotated it. But I really don't have a whole lot of feeling here on this one. I would maybe watch that support area there.
There you go. All righty. Next one would be EXTR.
Yeah, Extreme Networks. This is one that was on my strong earnings report or my strong earnings chart list. I really like Extreme Networks. I think this is one that continues to show signs of accumulation. And remember when I was talking earlier about stocks, I forget which one it was. I think it might have been IPGP that just keeps going up and doesn't consolidate. How it's difficult to figure out where a support level is. Well, on this one, you can see how we move up. We go sideways for a while, actually in a little down channel, and then finally look at the volume coming in on the breakout. Well, on a stock like this, what makes it easier, and I use this auto support, is when you get a breakout like this on pretty good volume, that when you pull back to this level, you can see that it actually acts as really good price support. But when you have a stock that goes straight up and never pulls back or never consolidates, there's just nowhere to really get a good feel for where your support is going to be. And to me, that makes it a very risky trade. So I tend to stay away from those. I would rather trade something like this because when it pulls back to support, if it doesn't hold, I can get out. But a stock like IPGP, when it's pulling back, I think it can really make play a lot of games with your mind as far as how long you're going to hold it. You start making excuses. Next thing you know, you have a really big loss. So that would be one. Then we also had consolidated kind of up in this area, and we're trying to hold on right now. If we can hold on at this level and start to move higher, that obviously would be the best case scenario. But you can see these tails. We've had three of them down to around 1250, and you've also got the 50-day moving average moving up from underneath. So I'd probably give this one a little bit more room, but I do like the fact that the volume trends are strong, and I look for this uptrend, this general uptrend here to continue.
All right, excellent. Let's see. The next one I have for you, and we were actually, I think, talking about this before the show. Square, SQ.
Yeah, Square. I'm watching this one. This also beat earnings. I mean, I don't remember if it was on this candle here, maybe one of these where it was gapping up. But this is kind of similar to what we talked about with IPGP. It's just, when the stock starts to turn parabolic like this, and then all of a sudden the selling comes in, when you buy at 50 and you see the stock at 41 and change the next day, very difficult to hold. I mean, that will really get your emotions going. And so I think what we're seeing right now is a lot of panic to the downside. I'm thinking that this 35, 36 area is a good solid area that if Square would just consolidate for a bit, what I'm looking for is maybe a cup. So if I could just get some sideways action here for a few days and then start to break out and see that volume come back in, that to me might be a signal to maybe take a shot with Square. I like the company. I like the earnings. I like everything. It just got so overbought. I mean, look at the RSI. So anybody buying this stock going up here through the 40s is buying it with an RSI near 90. And so when I say when you're buying an overbought stock, you take a lot more risk, this is what I mean. This is the kind of action you can see after you get these parabolic rises. So again, I think for me on Square, what I would be looking at is perhaps right in this area. You've got the 50-day moving average, you've got these tails. This was the last bit of consolidation we had where maybe for 6 or 7 days it looks like we were going sideways before we broke out on increasing volume. I think it could hold right in here. So I like this one more than others, but just keep in mind any of these stocks that have seen this kind of advance, when you do get into them, you are taking quite a bit of risk.
All righty. Let's see. The next one I have, let's see. Broadcom, AVGO.
Yeah, Broadcom looks like, I mean, we made the breakout here, but look at the volume down here, so much lower. And I'm not saying we have a negative divergence, but it looks like the MACD maybe is equal. And that breakout failed to hold. So I think we're going to get a 50-day test, and it also comes in right near price support. So I think I can kind of kill two birds with one stone just by throwing this support line right in here. And you can see on the most recent low, look at that tail coming down and hitting this area at about 258 or so before we reverse back up. So I do think this provides pretty good support because we know it's held in the past, and we also have that rising 50-day moving average. We're in an uptrending stock. This one I think looks pretty good as we get down, and maybe if it dips a little bit below that 260 area.
All righty. Let's see. Number 7 is BLKB.
Oops.
Interesting area of support right now. My PMO looks ugly though. Ugh.
Why is it not?
BLKB.
There was a problem saving. Okay.
All right.
I'm trying to save. There we go.
All right.
Okay. BLKB.
Yes.
This is another one I think looks kind of interesting coming back down the 50-day. See the higher prices, lower MACD, and on that breakout there, not really much volume to speak of, not like we saw on this move. So I think that negative divergence in price was being confirmed by volume not being very good. And now here we are resetting, getting that MACD back down near the center line, very close to that 50-day moving average. And I think you've also got some gap support maybe that comes in around 93.5 to 94 or so. So this is another one where I think I probably can just draw this support line that comes in right about there, top of gap support, which also just about coincides with price support as well. So recently the stock's been up to about 104, 104 and a half, and now we're back down in the mid 90s with support coming in at about 94. So when we talk about reward to risk, this is what I'm talking about. You're down closer to the support level. So if you get in and it fails to hold, you lose a couple bucks. But if you're right, you maybe get about $6, $7, $8 to the upside. So that's how you really want to try and set your trades up. So no guarantees that this one holds, but I do like the stock. I like the fact that it's pulled back and is close to a price support level.
Okay. Number 8, General Mills, GIS. I've got a really, really overbought PMO right now. But I do think it's sitting at some interesting support after the breakout from that 57 level.
Yeah, consumer staple stocks, the XLP just broke out finally. But consumer stocks in general have just been on fire. We've seen it with retail. We've seen it with restaurants and bars. Seen it in a number of areas, gambling stocks, a lot of the consumer discretionary home builders. I mean, the list goes on and on. But GIS is on the staple side, and that seems to be also kind of catching the tailwinds of the consumer movement to the upside. But I do see some overhead resistance. You can kind of see that this reaction high here, and then maybe this low down here. This is kind of an area of some overhead resistance as we move higher. You can see the bottom of this zone. We struggled in August, and now today, potentially, we are very overbought. You can see the RSI's moved through 70. We've had a really big advance, and possibly we're getting a reversing candle. We'll have to kind of watch that candle. But MACD looks good. So if we get a reversing candle, I think it holds. Any pullback will hold on that rising 20-day moving average.
Okay. Number 9, For our friends in Canada, lnr.to. So LN as in November, R.to.
All right, I think we're in a bear flag off of an uptrend. I think this trend broke. This is kind of like a breakaway gap to the downside, which I don't like. I'd have to see something really start to improve here on the chart before I would be interested. I mean, I think it's pretty obvious to see that we had a nice little uptrend in play for quite some time. And look at the volume here on this gap down. Not only did we gap down $6 or $7 at the open, but then we continued to trade down another $4 during the day. And look at the volume bar. That just reeks of distribution. And it's the exact opposite. The way I would play these are the exact opposite of the gap ups. When we have those Maribozu candles to the upside, this is one to the downside where it's just you gap down and you sell off all day. When you see these candles, normally if you get back up, when we have a gap up like here, this is a perfect example. Have a gap up here, not quite a Maribozu. You don't close on the high, but pretty close. Look at the heavy volume. See how we come back down and we hold the top of gap support here? Flip it over. We got the exact opposite here, gap down. And as we go back up, we hit the 20-day moving average and approach this gap resistance zone. And sure enough, we turn right back over. I think this thing's just kind of consolidating in this area. And you can see the support is pretty big just below 66. If that's lost, I think this one really is starting to confirm a downtrend. So I'd be careful with this one.
All right. And we have one more, and it's Merck, MRK.
All right. Merck. All right. All right. Well, this is another one. I mean, it's struggling. I don't like that tail on that reaction high. It looks to me like it wants to go back down. Right now, it's really got to make a decision on its chart whether or not it wants to hold that rising 20-day moving average, which has just started to rise. But if it does, then it's got to make this breakout above this reaction high. If it gets through that, the next key resistance is going to be just above 58. That's going to be the top of this gap resistance zone. If we fail here, then you've got to watch this 20-day moving average. And if that fails, you're probably going to see the bottom of this range again. So I think this area right in here is going to tell us a lot. If we can break out, get some volume, I think we have a shot to move above 58. If we fail, move back down below the 20, I would look for another test to 54.
Okay. And that is 10 in about 10.
15 maybe.
Yes.
I was doing a lot of I wasn't just annotating, I was doing a lot of commentary. So
exactly. And people want that.
Yeah.
I think if we raced through some of this stuff, we would probably make a few people unhappy.
Yep.
All right. So market update, and then we could go into our what would you do?
Yes. Go ahead and take it away. See what the market is doing.
All right. For our final market update. There we go. All right. I'm going to pull up the candle glance because I think that's the best way to see it. These are 2-day charts for candle glance. If you want to set up your candle glance to look however you want it to look, just set up the chart with the chart style you like, everything on it, the way you want your candle glance charts to look, and then save that chart style as candle glance. If you save it as that, that's what's going to appear whenever you click on candle glance. So for the Market Watchers account, I always have the 2-day. But for my own account, I have a daily 1-year chart. So it's a lot different looking, but just a quick, some quick shortcuts for you there. All right. So as we can see, Dow is negative, but it's not that far down. We're not really seeing that big of a decline. S&P 500 is now starting to, it's still up, but it's really right next to yesterday's close. We can see NASDAQ, it did have a very nice morning, but we are seeing a pullback. However, it is still doing better than our other indexes at this point. Russell 2000 staying in the negative, right at about its intraday lows. We can see Wilshire 5000 almost, we're looking at mostly unchanged. Treasury yields are down today. They were up earlier in the morning, but now they've fallen into the negative. reading about 23.74, but does look like yields are rising again. UUP, again, choppy day for UUP, but right now sitting at intraday highs at 24.31. Commodities had spent most of the day on the negative side, but have now burst through yesterday's close and seem to be forming a flag. So we might see some more follow-on rally for DBC commodities. Could see a flag formation on the USO as well. Really nice looking flag there on the intraday chart. So I'll have to see if we can break out to new intraday highs before the end of the day. If not, I would start looking at that intraday chart on the open tomorrow and see what this flag turns into. Currently reading at 1156 for USO. Gold gapped down and was continuing lower. Looks like it was trying to put in a few more, put in that intraday low. Looks like it was going to pair some losses, but it does appear we're moving lower once again. 119.94 for GLD. VIX is lower at 1102, declines leading advances. Let's go and look quickly at our scooter movers. And this is the stock charts technical rank. This is what I use on my charts for relative and internal strength studies. So right now, in the top 10, we don't see these move too much, but interesting, you've got Urban Outfitters, Coors. These are a lot of the retail sitting at the top right now. I'm going to show you the top up. Who are the big movers today? Micron actually is making quite a move here as far as the scooter is concerned. So I'm going to bring that one up. A lot of people interested in Micron. Very interesting. And I know this looks a lot like the XLK to some degree, which not a big surprise there. But we're now hitting this very important area of support at about $40 for Micron. You can see that with this decline in the technology sector and consequently in Micron, PMO sell signal, and it's just being ripped lower. I think this is a good sign, though. We want to see the PMO get out of that overbought territory and bring it down. The question is, of course, is this going to be the end of support here, or the area of support for Micron at this point? I would be concerned that no. I think you talked about it earlier, Tom. I think it was mentioned by my friend Michael Moore in the chat room, but we could be looking at a little bit of a dead cat bounce and possible head and shoulders, I know, on XLK. So that's something to consider when we're talking about technology. We're seeing the obvious, bounce after a very hard decline. But the question is it going to be able to hold that support at 40? I'm not thinking it will. I would be looking for a move a little bit lower than that before it turns around. And that's all I have for our final market update. And I'm going to turn it back to you, Tom, to get started on our what would you do? But I do want to let everybody know, Tom's going to show this chart. We're going to discuss it, but we're going to give you a little bit of time to look at it before we discuss it. And if you could, in the live chat box, we would love for your opinion, what you would do. And the best way for me to tally up is if you put data, DATA, and then tell me whether you would buy it, buy, hold, or sell short, or leave it alone. So those are the three answers. You don't really need to give me too much of a representation of why, because I'm really just tallying up what your responses are. So just the symbol, and then either buy, hold, sell short, or leave it alone, neutral.
Yeah, we've got we got data up on the screen. I'm going to leave it here so you can take a couple minutes to take a look at it, and definitely comment on what you would do. That's the whole purpose of the segment. Just give us your thoughts. There's no right or wrong here, unless you own it. If you own it, then it could be right or wrong. Could cost some money or could make you some money.
That's for sure.
Yeah, I think this is a pretty interesting chart, though, and we're going to get into some of the details. I mean, I see a few different things on here that's really compelling from both sides. So anyway, just wanted to get everybody else's thoughts on this one. Yeah, I mean, I think, we were talking about, or you were talking about Micron and technology and the move down, Erin, and I would just say that for me, I think that some of the risk obviously has been removed out of these technology stocks with the huge move we've seen down just over the past week. but I would tend to agree. I don't know that it's done. I don't like the way the NASDAQ is acting right now today, intraday. It had a chance to make a move, and start to take out some key short term moving averages on intraday charts, and it failed, and it's starting to roll back over. So I'm going to be really interested to see the last few hours today whether or not we can get some strength. But this is typical action in a downtrend. A lot of times you'll get some movement back to the upside in the first half of the trading day, and then you roll back over and continue that trend into the close. And then the next day, it's almost rinse and repeat. Sometimes you get that gap up, that early morning gap to the upside, makes you feel a little bit better for about an hour. And then the selling resumes and you just head back down again. I think it's going to take some consolidation. I mean, maybe we go down 5 days and 5 days later, we're right back at the top. But I'm looking for, at a minimum, some consolidation during this period of weakness, just to kind of get things stabilized so that a breakout or a move back to the upside is a little bit more meaningful. But we'll see how we'll see how it goes. So some of the comments coming in here. First comment I saw was a buy. Let's see. No touch. Another buy. There's a hold. We got a neutral. Abstain. We got all kinds of different choices here. Hold. Leave it alone. This one, another buy. Leave alone. Buy on a higher low when wave 5 starts. Okay, interesting.
Yeah, I thought it was interesting. When I tallied it up, I'm looking at almost an even amount of the buy holds versus neutral. I only caught one sell, I think, or short.
Yeah, well, leave it alone. I'm not sure if a leave it alone is a sell or a neutral. I'm not sure what that equates.
I'm considering it a neutral because, if you sell or short, that's kind of your bearish position on it.
Yeah, I mean, normally for me, if I'm neutral, I'm going to say, well, this kind of looked good. Well, I'm a little worried about this. And okay, it's a neutral. But if I say I wouldn't touch it,
right, then I would say that's a sell.
That has a little bit more of a negative impression. Yeah, there's a bunch of comments coming through, and it's definitely, definitely mixed. But most are saying, no reason to get in. Leave it alone. Just a few buys. So, all right. What do you think? I'm going to let you go first, Erin. What do you think? What would you do?
Okay, I'm going to pull up my chart over here. Let's see. I think I put it in our Market Watchers Live list, so it would be ready. Indeed, I did. All right.
You are.
All right. I'm going to go with the buy. I think that this is a pretty nice setup right now. I'm going to actually pull it up and annotate so I can explain my reasoning here. That's one big one right there. Okay, so I'm actually going to start down here on my indicators. Not anything overly exciting as far as the OBV, but it is trending higher right now. You've got a PMO. It is flat. We're not actually seeing that positive momentum yet, but we're in oversold territory, and it has flattened. I like the fact I have a declining wedge, falling wedge. Those are bullish patterns. And it looks like we're already trying to break out from that. You can just barely see it. So I like that. I think upside potential here at $75 on the gap resistance in this case, I think gives you some pretty nice upside potential. I'm not going to run out right now and go buy it. This is, as we say a lot of times, our edutainment. What's out there. Of course, you can go do whatever you want, but I would say when I look at this, I would be on the bullish side as a buy.
Okay. I'm trying to pull something up real quick, so just bear with me. I'm actually trying to find the earnings on it.
I'll pull up the weekly chart just for grins here while you're doing that. All right. Yeah, so see this, I think this is some pretty interesting support right here on the 2017, those mid second quarter highs. I do like the way that sets up. Of course, everybody's like, look at the bottom of the chart. You have a PMO sell signal in overbought territory. Indeed, I do. That would be something that would probably help me to set a little bit of a tighter stop if I was looking even on a buy and hold. That would concern me. But again, we don't have a whole lot of data on data.
No pun. No
So,
pun intended.
right? So that also would kind of make me think differently as well when I look at this weekly chart. I just don't have that much information, but it does seem to be following that 10 minus 10 kind of range. So it is overbought. There's no getting around that. There's no getting around that.
Okay. Well, I'm going to bring it back over now because I have the
Yep.
earnings up. And the reason for the big gap down back on November 2nd was earnings. And this is over at Zacks. You can see that their revenues came in at 214.9 million. Market was expecting 219.1. So this is on the sales surprise, which was a minus. If you pull up the earnings surprise minus, it's also going to appear here. And let me go down and show you somewhere. Here it is.
There it is.
Came in at 8 cents versus 9. So this just gets down, first of all, to a fundamental question for me, which is, do I want to own companies that are showing that they can beat their own estimates and projections, or Wall Street estimates and their own projections? Or do I want to own companies that fall short and have to try to make excuses on how things are going to improve in the future?
Mm.
And for me, it's not even close. I don't even look at a stock that beats or that misses its top and bottom lines. I think sometimes this is just the first cockroach in the kitchen. They talk about, there's never just one. And so I don't like companies that miss. Now, I said that there were, arguments on both sides. I saw, your annotation there, Erin, on price support and gap support. And for me, after gapping higher, you can see right here with very heavy volume in August, we gapped up, went back into this zone. And right here is kind of the prior high. So this is a pretty key area of support, and we're getting close to it. But I don't like that massive, that's the biggest volume on the chart on this gap down, but it is a hollow candle. So this is what I'm doing. I'm kind of going back and forth. It's like, okay, this is bad, but this is good. But then this downtrend continues, which is bad, but we're near gap support and price support, which is good. We can't get back up above the 20-day moving average, which is bad, but we could be putting in a cup, which is good. So I'm going to say that I wouldn't touch this thing. It has to show me something more technically before I would be interested. Part of the crossover that you see here on the MACD just gets down to the pure calculation, mathematical calculation. And when you get a big drop like this and you continue moving lower, but the drop isn't as fast as it was before, you get this initial move down, this big spike down the MACD, because the short-term moving average gets impacted by this decline much faster than a long-term moving average. And then as you slowly drift lower and lower, the reverse occurs and the long-term moving average starts catching up. And that's why you start to see this MACD turn higher, even though I really don't see anything turning anywhere in terms of price action. So I'm going to say I'm staying away from this thing. And if I got into it at all, it would probably be somewhere, if I saw a reversing candle on heavy volume, maybe around 67, 68. The reason I would consider that is that I at least be able to, I could keep my stop really tight.
Mm-hmm.
And I would want to see an immediate move up off of that. I would not have any tolerance at all to the downside. And even with that, there's a risk, because now that they've missed estimates, who's to say they're not going to warn about the next quarter? And so that's where it kind of opens up that possible can of worms technically. So I'm not a big fan here. Just me.
I'm gonna pull up my chart just one more time.
Okay.
You did make a really good case here. All right. One thing that I do find that could be concerning as well is that intermediate term trend model neutral signal when the 20-day EMA crossed below the 50. So that immediately should put you on alert as far as the intermediate term. But it is a neutral signal. And the 50 is still above the 200. So I can still make a case for a bullish, to have a bullish expectation, because the 50 is still got quite a bit of margin between the 50 and 200. So I think this was a really interesting exercise, because we really did end up pretty much on opposite sides. But it just shows you that We all analyze the market differently. We all depend on different indicators to help us make those determinations as to what to do. And sometimes they give us different answers depending on the analyst.
Yeah. And, when I just look at that data chart, I see just such a beautiful uptrend in play off the March low through beginning of November. And when I see a massive volume move and it takes out a trend line like that, I kind of get the impression that that uptrend is over. So, um, but only thing I would say, and I wouldn't say this is any different for any other stock, is just make sure you keep your stops in play. That's the whole key with trading is everybody sees things differently, but you just want to make sure you keep your risks to a minimal level.
Exactly.
All
Exactly.
right. I've got a couple of stocks that I just want to show real quick before we exit today because we are getting close to the end of the show. We were talking about some of the chart breakouts. And so I've got a couple I just want to show real quick, a couple interesting stocks I thought. And so first one is, and I mentioned this one probably last time we talked about chart breakouts. This one hasn't made, you're looking at it, you say, well, yeah, it looks like it keeps moving higher. It's breaking out. Sometimes it's important to look at the weekly chart. Take a look at the stock. It continues to meander up here around 29, 28, 29, 30. We have been trying for multiple years to get through 30 on MTDR. I'm continuing to watch it. Haven't made the breakout yet, but sometimes spotting these potential breakouts before they break out is half the battle. And so this is one that I've kind of got on my radar that I wanted to mention. I think Starbucks, of course, you got to mention Starbucks because I do a lot of work from Starbucks. I write my blog every day from Starbucks.
Wow.
Get my same latte every day. So I got to give a shout out.
Yes, who are your baristas?
Yeah, they're always trying to, have me pay rent there. But I'll just give them a shout out for their stock anyway. Beautiful move up though today as far as breakouts go. You can see the volume over the past week or so has been picking up on this move higher in Starbucks, and we did take out this gap resistance, or we are taking it out with this move today. The top of that's the close back in July before this huge, massive volume gap down, and we are clearing that. I think it's going to make another run for 64, and I would be using that rising 20-day moving average as support to the downside. Another stock that I wanted to show, and sometimes, the difference between a breakout and a false breakout is where you close.
Mm-hmm.
DOLL is got the gap up, looks beautiful, taking out the prior high. Look at the MACD though, negative divergence. And if we finish with a black candle and we don't hold that breakout level, I think that could be a topping candle on COLL. So that one will be interesting. It is a pharma, by the way, which these pharmas can be incredibly volatile. So you want to be careful with that. But just wanted to mention, when I see something like this, yes, we broke out. This clearly is a breakout, but get the reversing candle in there and not, if we can't hold this into the close today, I think this could be a warning sign in the near term. However, if we start to move back higher and get back toward the high of the day over the next few hours, I think it could be a great, nice breakout. So anyhow, we are just about at the end of the show. Erin, any final comments for today?
Oh, goodness. I think really the interesting thing to be watching right now is obviously the technology sector and just seeing if, as we were talking about, are we looking at just sort of a bounce off of a pretty deep decline, or is this something that is going to preclude, another rally at this point instead of just a quick bounce? So I'll be watching that.
Yeah, I'm also going to be keeping a close eye on technology, see how those stocks finish today. I think a weak finish, I think bodes for lower prices in the days ahead. Also, some of the other areas of the market I looked at earlier, XLI, XLF, so forth, very overbought. XLY, very overbought. So we could just see normal profit taking there. And if the money doesn't rotate into areas like technology, that could lead into some of this pattern, seasonal pattern weakness that I talked about earlier in the show, where from roughly the 8th of December through the 15th, we historically see profit taking in weakness ahead of the Santa Claus rally in the second half of December. So those are some of the things to be thinking about. I do want to mention Tushar Shande will be with us tomorrow. So he will be joining the show for the first time. Definitely you want to be here to check that out. Greg Schnell will join me on Thursday and sub for Erin, who will be out for the day. But Erin will be back on Friday and will provide you an in-depth look into the DP trend models. So don't miss that. Saturday, 11 a.m., Stock Charts Outlook. Greg Schnell and I will be hosting that show, and we'll be talking about probably the end of 2017 and what we're looking at as we head into 2018. So a lot of good stuff on the calendar there. I want to thank everybody for stopping by. Lower right-hand part of your screen, you'll see the How'd We Do. You can click on that. Very brief survey. We'd love to hear from you, get your feedback on what you think of the show and any suggestions you have on future shows. As a reminder, Market Watchers Live now airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great day, everyone, and we'll see you back here tomorrow. Happy trading.